Today we're here discussing 1031 exchange. We get a lot of inquiries and questions from public investors asking, how do they do 1031 exchange? What is 1031 exchange? What do you need to qualify to do a 1031 exchange? And we're here with Carmen DeFalvio, National Director of Security First Exchange right here in Summerlin. Thank you very much, Carmen, for helping us and being here with us.
Yeah.
So briefly, what is 1031 exchange?
Sure. So 1031 exchanges is part of the tax code that allows investors in real estate to be able to sell their investment property and buy new investment property. And what you get, the benefit to you is that you get to save those tax dollars. So instead of paying the tax dollars or your capital gains to the IRS, you get to keep those dollars and use that money to reinvest into your new property. So instead of giving up a certain dollar amount, you get to keep those dollars, you have extra money to reinvest in a new property, so now you get to make money on the money you were paying to the IRS. That's the benefit of 1031 tax savings.
Waiving the taxes on the capital gains.
Deferral. Remember, you're going to pay it later, you're deferring it for now.
Oh, you're still going to pay it later, but you're deferring it for now.
Exactly.
Very good, very clear. And the purpose of doing it, it's more to upgrade your property, or why would anyone sell one and buy another one?
Yeah, that's a great question. Maybe you want to upgrade. Maybe you want to relocate. Maybe you're moving from California and want to buy property in Nevada. So you say, all right, I want to sell that property there and get more bang for my buck here.
Got it.
Or maybe you own a house here and you want to leverage out. You want to buy two properties with it. You can do that too, as long as you follow all the rules of the 1031 that we're going to be talking about.
Very good. Okay. And can someone do 1031 exchange on their primary property, or is it only investment?
Yeah, 1031s are only for investments. So it doesn't work for your primary residence. It doesn't work for a second home or a vacation home. It's got to be property you hold for investment. So rental property or commercial property or land, nothing you live in personally.
Got it. And commercial would qualify, commercial real estate. What specifically qualifies for?
That's a great thing about 1031 is that you just have to sell investment property and buy investment property.
Okay.
So that could be commercial, residential, land. You can do any exchanges with that. So if you own land and it's you're not making anything on it, you want to sell that land, you want to get some income producing property, 1031 is a perfect way to do it.
Okay, got it. And it's only for real estate, right? You cannot do stocks, bonds.
Yeah, it is only for real estate. You can't sell stock and do a 1031 into real estate, or vice versa. You can't sell a house and buy stock. It's real estate for real estate.
Got it. Excellent. And who can take advantage of this?
Any investor can do a 1031 exchange, even if they're foreign investors. So it makes it a little more complicated if they're not a U.S. citizen, but it can still be done. So anybody that holds property for investment purposes can do a 1031.
Got it. And any state throughout the whole country.
Exactly. And you can move back and forth too. Like I said, if you're selling property in one state, you want to move it to another, that's fine. Bounce back and forth however you want.
Very good. Okay. And are there any financial requirements or limits?
Yeah, there are some financial requirements. Really, they're minimums. If you're selling a piece of property, basically, you have to buy new property of equal or greater value than what you sell. So, quick example, if I sell a house for $300,000 and I'm doing my 1031 exchange, I have to buy new property for at least $300,000. Now, it doesn't just have to be one. Like I said, I could leverage. So if I sell a house for $300,000, maybe I want to go buy two condos for $150,000 each. Yeah, that works too. Nice. So as long as I at least buy what I sold, equal or greater, I can defer my taxes.
Got it. And I understand there's time frames and requirements to be able to do the exchange successfully. So if you would please explain what are the time frames.
Sure. So there's two time frames you really have to worry about in 1031. We have the 45-day identification period and the 180-day exchange period. So from the closing of the sale, you have 45 calendar days after the closing to identify with a qualified intermediary exactly what you're going to buy. So you have to tell us within the 45 days you're going to buy 1,000 Main Street or 2,000 Main Street or whatever case may be. And then you have a total of 180 calendar days from the closing of the sale to actually close on it. Now, I did just bring up qualified intermediary. You do have to hire a company like us, Security First Exchange, a qualified intermediary before your sale ever closes escrow. Because what we do is we document the transaction, and then at the closing of the sale, the money doesn't go to you as a seller. It comes to us because you're not allowed to touch your own money. So as the intermediary, we hold the money into it, we deposit into an exchange account for you, and then the money sits there until you're ready to close on your purchase. And then we fund that on your behalf at the closing. So you never touch your money. You do it with all in the time frames that we talked about, you get to defer your taxes. That's the benefit of the 1031, but do remember, you have to hire that qualified intermediary before the sale closes. If you don't, you can't call afterwards. It's too late. You have to do it before.
So the property that someone's going to sell, they have to register it with you. Is it recommended to do it before even it's listed for sale, or finding a buyer, or how does it work?
Don't even reach out to us. I mean, if you have questions, feel free to reach out to us, and we're more than glad to talk to you and explain the process.
Sure.
But we can't prepare any documentation for the 1031 until you're under contract.
Got it.
So
Okay.
really, if the steps with that would be is work with your realtor, of course, open up escrow, then you call the 1031 exchange
Register.
company, and then we work with your escrow officer to get everything prepared for the 1031 to make sure at the closing everything's been done properly, you get the tax deferral, and then again those time periods start, that 45 and 180 days for you to find and to close on your purchase property.
Excellent. Okay, great. And what for someone who's doing a 1031 exchange, from your experience, what is it mainly they should be aware of, or something that could go wrong, to be careful and avoid any surprises? Anything like that?
There can always be little hiccups in any transaction. I wish I could grab a crystal ball and know everything. But I'll tell you that probably the one that comes up the most often is that 45 days. Finding the property in the 45 days.
I see.
In some markets, it's no problem. In today's environment, in our market, it's a challenge. So don't waste time in that 45 days. You really need to hit the ground running. Find those properties, get them under contract, do your due diligence on them, because it can be a challenge.
Sure.
And if you don't find it, then you're going to have an invalid exchange.
Sure.
So you really want to make sure, don't waste any of that time.
Excellent. Okay. Well, it's been very helpful. Thank you very much for all the information. Carmen DeFolvio, National Director here with Security First Exchange. And thank you. And if you have any questions about 1031, we will be posting Carmen's information here in the bottom of the video. And if you need any help with real estate, feel free to reach us. We're always happy to help.